Today's trading lesson is on things that we see at bottoms, when stocks put in bottoms or markets put in bottoms. And we're going to talk about Twitter today, Chipotle, also maybe take a look at a couple of charts from Apple and the SPYs. So something that actually caught my attention the other day was when Twitter was coming down prior to reporting their earnings quarter. There was a big hullabaloo on the stream with the hashtag RIP Twitter. Supposedly there were rumors floating around that they were going to change their timeline, and just the negativity was at a fever pitch in terms of the active Twitter users. And at the same time, the stock itself was just going down every day, just slowly but surely going down, down, down. And someone posted a chart actually on StockTwits where they said, they analyzed the chart and it was in a steep downtrend, or has been in a downtrend for a long period of time. And they said something like, there's no signs of capitulation. They looked at the volume and they looked at the chart and there was no capitulation, meaning there wasn't a huge spike in volume, so there was no way to kind of call a bottom in the stock technically. Now, I'm not sure how widespread this belief is that stocks need to do a massive amount of volume to print the bottom, but it's just not true. Sometimes stocks will trend down for a long period of time and you'll just run out of sellers. And I actually tweeted something like that coincidentally on February 11th, right around when the market actually bottomed, which is sometimes people are getting out on the way down and there's just steady selling, and maybe there's a little bit of an uptick of volume at the bottom, but sometimes you just run out of sellers and there's buyers at the bottom and we start to tick up a little bit and more buyers join in as people get more confident, and that's it. And so that's just not the case. And so if we actually look at a chart on Twitter, we can see that coming into earnings, it was trending lower. And I circled right on the chart the 3 days right before they reported earnings and the 2 days after. There was a good amount of volume there, but certainly not nearly as high as the volume from a couple of weeks earlier when I think there was some sort of rumor about maybe them being taken over. But that's the bottom. The earnings came out. They guided lower, so you saw a lot of headlines. And this brings me to the point, other things that we see at market bottoms. You'll see bearish headlines. Twitter user base going lower, stock being punished. But meanwhile, within 48 hours of those headlines appearing, the stock was 15, 20% higher. And as I create this video today, I think the stock is actually about 35, 40% off of the after hours low. And so you don't need to see capitulation volume at the bottoms. Here are some of the things that you can see at the bottom. You'll see analyst downgrades. Inevitably this happens, a stock is down 40, 50, 60%. You'll see a bunch of downgrades. That's quite common at market bottoms. You'll see shorts pressing their point of view. We'll take a look at the Chipotle chart in a second. And in December, when Chipotle first started reporting these, or actually was it even December, maybe it was in November, they started reporting these E. coli cases. The stock came off a little bit but didn't react so much. But then another E. coli case was reported and the stock started to come off. And one thing I noticed, and I work and live in Manhattan, is every day when I walk to work or I go home, I walk by these Chipotles in my work neighborhood and where I live, and you could see the crowds were getting less and less. Typically what you saw before this E. coli stuff started was during lunch, literally a line inside of Chipotle around the entire store. And after the second announcement that there were problems, the line started to disappear. And I actually tweeted a picture back in December, look at Chipotle, there's no line. Well, something kind of interesting happened in January after the stock had already come off 20 or 30%. People were still showing pictures of Chipotle. Look, there's no line at Chipotle, no one's at Chipotle. That was really a telling thing before the stock actually had dropped 20, 30%. But this whole idea of actually people tweeting out these pictures after the company lowered guidance and the stock was already down at around $400 a share, was kind of me, from my perspective, shorts actually pressing their case. It was one thing when the stock was 540, 550, even 500, sending out those pictures and saying, hey, look, this is actually having an impact on their business. But once the stock dropped 20% and then they lowered guidance, then all the analysts started to downgrade it, I thought it was a bit of overkill. And those pictures that had been appearing recently when the stock was still down in the 450, 470, those things were punished. I mean, the stock today was up at $5.20, $5.30 a share. And so one of the things you'll see at bottoms is people pressing their case. Shorts, they're just like longs. They like to be greedy. The stock came off from $5.50 down to $400 a share, and people kept on pressing and pressing and pressing. Well, when they downgraded, and I tweeted the day that they lowered their guidance, was, hey, people were looking for this lowering of guidance. Let's see if it actually can put in a bottom today. It did actually bounce $30 or $40 that day from the pre-market low, but it did tick down for a couple more days after that. You can kind of see I marked up the chart. But you saw a couple of people downgrading at the bottom. I also highlighted when the stock finally started to tick up again, you can see there was someone who actually upgraded. Occasionally, you'll get an analyst when things have been beaten down and start to show some signs of bottoming, they'll actually upgrade. And you'll see the same thing vice versa at tops. Sometimes analysts, when things have run up too much, they'll actually downgrade. It's not the norm. Usually they're downgrading at the bottom and they're upgrading at the top. They add to the problem, they add to the fever. But occasionally you'll see them do the right thing, and you can actually see that on the chart there. Other things you'll see at bottom, I talked about a little bit earlier in Twitter, just RIP Twitter, people saying, there's more pain ahead. When the stock was below $15 a share, when it had come off from 25 down to 15, the whole idea of this more pain ahead, it's over, Twitter's going out of business. It was so ridiculous. The people, smart traders were talking about it on StockTwits saying, hey, I'm getting long here. I think I tweeted out before the earnings report, if we can get this to come in, 13 is kind of the bottom of the range, you can buy there. And then, what we saw in Twitter was the day after earnings, it didn't really go up much, but the next day, as soon as it started to show some strength and got back above $15 a share, it was very clean for the next few days, trading all the way up to $17.5, $18 a share. And so, ultimately, downgrades at the bottom, despair, but we want to see price action confirmation, and that's what we got. You didn't have to, look, I talked about buying Twitter when it was going down below 14, buy it into 13. I like to buy things into weakness. I like to buy fear. I like to buy despair. But you could have waited for that price confirmation when it got back above 14 and held the next day, and then when it confirmed the following day above 15, that's fine. Go with the price action. It broke the long-term downtrend, and it went up another, $3.50 from there. That's a 20% move in 3 trading days. But those are things that I look for at the bottom. I wanted to go back to the idea of what I started to talk about at the beginning of the video, which was, do you need capitulation? Do you need heavy volume at the bottom? You don't, but I wanted to give you an example of a time that we actually did see that. Lululemon had been trending down for a few years. Back in the summer of 2014, it gapped down around $38 a share. We saw a huge spike in volume, and although it didn't mark the bottom in the stock, the next day it actually traded a little bit lower. Once it got back above that earnings day low, above $38 a share, you can see it based there for a few months, it never traded lower. So that's an example where we saw a heavy volume and it actually did mark the bottom. But now let's take a look at Apple. A few years ago, Apple, people were worried that we had hit peak iPhone sales back in 2012. The margins actually started to come off a little bit on their iPhones. People were worried that that would be a trend. And so it sold off for about 2 quarters, and there was a large spike in volume on a gap down. Now this is split adjusted, obviously. This is, the actual low, I think, on that high volume I'm highlighting on the chart was probably around 430, 440 a share. But this is split adjusted because it did a 7-for-1 split. You can see it did heavy volume, had a little bit of a bounce, but look what happened over the next few months. It actually traded much lower, and it traded below, at the time was below $400 a share. That was the low. It was retested again in July. That marked the bottom. So again, good example of there was no capitulation volume in Apple at the bottom. It just happened they reported their quarter. The margins were a little bit better. I think if you actually if you go into Google and you do my thought process, $AAPL Spencer, you probably can find where I gave my blow-by-blow, tweet-by-tweet, kind of at that bottom, what it looked like and how I traded it from the bottom. But there was no capitulation volume in this case. And so I want to kind of put that to rest. You'll see a lot of fear at bottoms. You'll see people talking very negatively. You'll see analyst downgrades. But ultimately, you do not have to see some sort of capitulation volume. Trends can end in one of 2 ways. They can end with a burst of volume, whether that's to the downside, whether it's an uptrend or a downtrend, or they can they just kind of run out of buyers or sellers, and the volume is not particularly high. You put in the low, and it starts to move the other direction. So here's a few things for you to look for. I thought this was very timely in the sense that the market has been beaten down. A lot of stocks have been beaten down throughout 2015 and early 2016, and we're seeing a lot of stocks put in bottoms, but by no means do they have to do some massive spike in volume to actually start reversing and heading higher. Thanks, and goodbye.
Become a member of our trading community by joining SMBU Premium. Each month, as a community, we'll work together to improve our trading with a shared hour of learning. On our trading desk in New York City, the best traders continually grow. In fact, the best traders trade to grow. SMBU Premium is packed with 12 webinars, one a month, focused on market-specific trader training that will help you become a better trader by the end of the month. Invest in yourself, invest in your trading. As I wrote in the playbook, tomorrow you can be better than you are today. SMBU Premium, how good can you be?